You're on.
Thank you for joining us. Today is Friday, August 1st, 2014. My name is Joe Terrell, president of Terrell & Company in St. Louis, Missouri, independent wealth managers with approximately $740 million in assets under management. We update these videos as we can to allow not only our clients but other interested parties to get an idea of what we're thinking and maybe perhaps where we see the economy going and where we see investment markets going. Brian Curtis is helping me today with the filming, and he assured me that I didn't look too casual today, that it was okay for us to do a update. So Brian, I hope you're right. I hope I look appropriate, that it's not too much of a casual Friday.
No, you look just fine.
Okay, all right, good. With that said, let's start, Brian, and maybe we'll talk about what I call the noise of the summer that's occurred here in the past couple of months. We've had a number of different events this summer which are affecting world economies as well as affecting the investment markets. Let's first talk about what the events are and my opinion as to how they might affect the economy and ultimately affect investment markets. And one of the first ones is we have seen banks going broke in Portugal and rumors of more banks potentially going broke in Portugal. And this is an issue, as I've made comments before over the past year and a half, that I do not see as being a major effect on world economies. I don't see a ripple effect anywhere that's going to cause other banks to go broke, and therefore we would get into a spiral that we almost went into in 08-09, where people begin to be afraid to lend each other money. They get credit sensitive because we get to the point where everybody believes all the banks are going broke. I believe this will be an isolated incident, and it will be handled. The banks in Portugal will be recapitalized, and I don't anticipate it being a major effect on economies and or on investment markets. The next couple of issues are much more serious in nature. One of the first ones being the recent fighting in the Middle East between Israel and Hamas. And this is a tragedy, human lives, every day a loss of human lives, and it makes people nervous. As it relates to the world economy, I don't see it having a major effect where we would see people reluctant to do business around the world with each other because of what's going on there. I'm very much like everyone else hopeful that they'll find some type of diplomatic resolution to it, and that they can figure out how they can coexist in the same area of the world. Conflicts in the Middle East, and particularly with Israel and its Arab neighbors, has been going on a long time, way too long. It really is something that I think the rest of the world would like to finally find a resolution to, so we could have true peace in that area of the world. If it did, it would be a positive. On the other hand, I don't see it being a major negative. Let's go on to the other major conflict going on, which is in the Ukraine between Russian-supported dissidents or Russian-supported terrorists, dependent upon your view, and the Ukrainian government. There was a time frame when Ukraine was part of the old Soviet Union. When the old Soviet Union fell apart, Russia had bankruptcies, etc. The rest of the world forced Russia to if you will, give back a lot of these territories to their former independence. And certainly that's what happened in the Ukraine. It was and has been a completely separate country of its own, and now there's a lot of thought that perhaps Vladimir Putin, as president of Russia, wants to somehow reclaim the Ukraine for Russia and take away its sovereign rights to exist as an independent country. This is potentially a pretty good problem that maybe could interrupt world trade and cause an economic downturn. The reason being that many countries around the world, Europe in particular, trade with Russia. Russia trades with them. By itself, it's not the idea that Russia is a monster economic powerhouse. It's the fact that one of the ways that the rest of the world is trying to deal with this is telling Russia, we're going to initiate sanctions against you and we want you to stop interfering in the Ukraine. Well, putting sanctions on really means we're not going to allow you to do business with the rest of the world, and the rest of the world isn't going to do any business with you. If there's any spread of this, it could become a scenario where the ability of countries to do business around the world with each other becomes limited. And that obviously would not be good for the world economy. At the moment, there's been no inclination that this worldwide embargo is somehow going to spread to other countries, etc. But it does bear watching. This is an issue that could hurt the world economy. Certainly the Malaysian airliner being shot down over the Ukraine was a horrible event, but it hasn't stopped international air travel, it hasn't stopped international trade, and I don't believe it will, and I'm optimistic that they'll find some solution to this problem in the Ukraine without it leading into a situation where world economic activity grinds to a halt because of different sanctions and people refusing to do business with each other, subject to where they break down upon this issue. So we're definitely trying to watch events to go on in the Ukraine to see if this in any way is going to widen or it might affect the world economy. Right now my answer is no, it's not going to have a major effect on the world economy. It'll be more of a lesser issue. But nonetheless, very coupled with Israel and the Hamas and some of the other events of this summer, it's creating a lot of noise, and we must watch this to see how it's going to affect things. So we had been through a period, Brian, actually, where it had been kind of quiet and there hadn't been a lot of changes, but now that's over with. One of the other issues that's come up is just how well are economies around the world doing. In the United States, a few days ago, we announced that we'd had 4% real growth in GDP in the United States during the second quarter. This will be revised later, and they'll come with more economic news on this, but this is very good, and this is what we anticipated for those that follow these video casts. We talked about how this winter the economy was negatively affected, and it really wasn't economic events, it was entirely weather related. This major growth in the economy for the second quarter, early indication of what real growth is in the second quarter, is closer to what we think is going to begin to happen quarter after quarter in the United States in particular, and as we've said before, we look for some of the best growth in the world and best economic activity in the world to be right here in the United States. Europe is recovering from their previous recession of 2011, 2012, and we hope the concerns over sanctions against Russia doesn't ruin business confidence over there to the point where they slide back into recession. We don't believe so, we don't think so, but we certainly are more than willing to admit that it's possible that could happen. So, Brian, let's maybe move on to talking about how all these events we believe is affecting the market for investments, and maybe what we think will happen between now and the end of the year in the investment markets.
Yeah.
Really interesting to observe how the markets are reacting to these worldwide events that have occurred recently, whether it's the surprising growth of the U.S. economy that was acknowledged the other day, whether it's the events going on in the Ukraine, what's going on in Europe, what's going on in Portugal. We still have Vietnam and China in somewhat of a conflict. But very interesting to watch this, because I don't think the market can make up its mind what it wants to worry about. Yesterday the market was down 310 points, I believe, or 315, because the markets had assumed if growth in the United States is as strong as what was reported, that will encourage the Federal Reserve Bank to increase interest rates. And if the Federal Reserve increases interest rates, that'll make alternative investments less attractive. In my opinion, that's nonsense. It'll be a long time before interest rates get back to a level where they're actually competition in the investment markets. The Fed could raise interest rates to 1 or 2%, and that's not going to change everyone's mind around the world about where they want to invest and what they want to do. What's much more important than that is, are corporations making money? How well are they doing? How well is the credit worthiness of borrowers, etc. And we just finished corporate earnings season and reporting for the June 30th reports, and in my opinion it looks pretty good. Most corporations are doing well, their costs are down, their profitability is up, their productivity is up. Yes, me and everybody else would like to see their sales be higher, but I'm not worried about the fact that they're not, and certainly corporate profitability is doing well. The other issue on interest rates, why I don't believe if interest rates go higher in the United States, it's going to be quite a while before it bothers anything, is because interest rates are not going up elsewhere around the world. Let's just, as an example, use Germany, because it was interesting that last week 10-year bond rates in Germany fell to 1.125%. That's the lowest in the history of the world that anybody could ever monitor for interest rates in Germany. Our interest rates are not going to go to 3, 4, 5, 6% when elsewhere around the world investors are struggling to find a place where they can get more than 1 1/8%. It's a world market that we have right now, and I'm not worried if interest rates go up in the United States that somehow that's going to hurt the economy, somehow that'll be major competition in the investment market, and therefore our prices are worth a lot less than what they are today. Let me go back and maybe say it in a different fashion. I don't believe interest rates are getting ready to go up in the United States. As we said in the last video cast, there's too much money around the world looking for a place to invest. And I don't see a scenario where money that's being forced to take one 1.5%, 2%, whether it's in Japan, whether it's in Germany, whether it's in Canada, Ireland, that somehow interest rates in the United States are going to go to 5%. No. Long before interest rates go to 5% in this country, there'll be a tremendous amount of world money flow into this country to buy those investments, which will keep interest rates down. Said another way, some of the reactions of the markets this week are predicated upon a time frame when it was a domestic investment market, it was a domestic economy. Throw all that out the door, it doesn't exist anymore. It's a world economy and a world investment market. And I believe that we will continue to have low interest rates for the near future. I'm not in a camp that says interest rates will never go up again. I just happen to think that they're not going to go up for at least a year. Even if the Fed raises interest rates on Fed funds from 0% to 1%, that's not going to create a scenario where mortgage rates go from 3.5%, 4% to 7%, kills the housing market, hurts the economy, or for that matter even hurts corporate profitability. Ironically, today is one day after the market fallen 315 points. Today is a day where the markets seem to be a little concerned about the opposite. Some of the economic news out of Europe and the reaction of the European markets to the ongoing problems between Russia and the Ukraine have people in Europe believing the economy over there is really going to go back into recession, and therefore their interest rates are going to go even lower. And today the markets are worried about a weak economy and maybe its effect. Yesterday they were worried about the economy being too strong. This happens, and in a nutshell, what really happens in the world of investments is markets do not like uncertainty. And we're sort of in a period here this summer where we now have some uncertainty. There's uncertainty about geopolitical events. There's uncertainty about economies around the world, and there's definitely a lot of uncertainty out there about what interest rates will or won't do. And that's the problem. I believe our markets are going to continue to be pretty good between now and the end of 2014. We'll get past this phase that we're in at the moment where people are worried. I still believe we could see markets 3 to 5% higher between now and next spring. I don't see anything short of one of these geopolitical events really becoming a terrible environment. I don't see anything that's going to cause prices to crash, and I stick by what I've been saying for the past couple of years. There's too much money out there now chasing after investments for us to have a huge pullback, because there's no alternative place for world capital to go. And I continue to believe that is the case. So I don't want to sound like Pollyanna that, well, it's a great world and there's no problems, there's no issues, nothing could ever happen. I just happen to believe with that much money looking for investments, it's going to be hard to see any type of major pullback. And ultimately, I think money begins to flow again, and as it begins to slowly flow back into investments between now and the end of the year, perhaps we push prices 3 to 5% higher. Thank you for joining us today. Once again, I'm Joe Terrell, president of Terrell & Company in St. Louis, Missouri, independent wealth managers. Brian, I thank you for your filming and expertise on editing our video cast and getting it posted on the internet. We'll be back in about 30 days with a new update or as needed.